housing news. That's our topic for today's Backstage Pass. Good morning, I'm James Lopez, president at HomeFi Corporation. Thanks for watching today. I want to talk about some more housing news that came out today, and we're going to talk about house price index. All right, so the Case-Shiller home price index, which is considered the gold standard in the measurement of appreciation, came out, and this data was for the month of April. So we're a couple months behind. The data lags a little bit, but this is the data for the month of April. In April, it showed that home prices rose 2.1% month over month, and they rose 20.4% year over year, which is flat, about the same as it was for the previous report, which was for the report of March. It's still incredibly blistering hot, right? Now, FHFA also released their house price index, and this data shows appreciation for specifically homes that have conforming loan amounts on them. Now, you can have a $1 million house with a conforming loan amount, but this typically measures homes that are a little bit on the lower end of the price spectrum. So the data for the month of April showed that year over year, home prices rose 18.8%, and that's down just a little bit from the previous report, which was 19.1%. And then month over month, home prices rose 1.6% for April, from March to April. So still, again, very, very hot values as far as the Case-Shiller and the FHFA home price indexes are concerned. Now, William Doerner came out and talked a little bit. He's a supervisory economist for FHFA's research and statistics division. He came out and had a quote, and I'm not going to read it verbatim. Basically, what he said is that while the big thing that's causing upward pressure on home prices is low inventory. So the inventory factor is creating this upward pressure on home prices. And while he said even though interest rates for mortgage rates are higher, the mortgage rate still has not tampered demand enough to keep demand going in this low inventory situation. So even though mortgage rates are up, that's still not having a huge effect on demand right now, and home prices are still being supported by the strong demand and the low inventory. Now look, this data shows for the month of April. In the month of April, the average 30-year fix was about 5.25%, so it does account for a lot of the rise in interest rates, not all of it, but a lot of the rise in mortgage interest rates, okay? So what this really shows us is that this data is coming in, accounting for some of those mortgage interest rates. It's really not slowing down demand that much, and it's being supportive of home prices. So again, like we've said before, we don't see home prices or home values declining. Instead, what we're seeing and what we expect to see and what we want to see is, instead of appreciation being at 20%, we see appreciation coming back down to normal levels from year over year to next year, about 5%. All right, so again, housing market is still red hot. It's still very, very strong. We do expect to see some slowdown on that appreciation, but we don't expect to see home values going backwards. And that's good news for housing. It means that real estate and housing is still a very, very sound, good investment. And look, rents are increasing as well, right? So we've talked about this. When you buy a home versus renting, you get the opportunity of amortization. You're paying down that amount that you owe every month, all right? You get your payment locked in. Rental rates can go up and typically do year over year. So you get your payment locked in, and you're building wealth because you're appreciating every year. Your home is getting more and more value. So again, housing, still a strong market. And we'll look forward to seeing how things progress as far as appreciation over the coming months. We'll see if that slowdown starts to happen. Now, moving on to the mortgage bond market. Mortgage bonds are down this morning about 14 basis points. The 10-year yield is up about 4 basis points. 10-year yield is testing that upper level of ceiling of resistance at 3.25%. So we'll see what happens throughout the rest of the week, especially as PCE data is going to come out. We'll see how the market reacts to that. Basically what it means for mortgage rates today, mortgage rates are going to open up a little bit higher than where they closed off yesterday. Still trading in that broad sideways range, but like I said, we're kind of for bonds, we're at the floor. For the 10-year yield, we're at the ceiling. So we'll see how the markets react to PCE data, and if that, if we come back off of that ceiling of support on the 10-year and start to come back down, then we could see mortgage rates start to come back down as well throughout the rest of the week. That's all the news that we have today. Be sure to like, comment, and subscribe. If you have any questions, leave a comment. I'd love to answer your questions for you. Hope you have a wonderful day, and we will see you tomorrow.